Good morning, everybody. Steve and Mike here, and welcome to the Ankerstar Wealth Morning Show. Three exciting topics for you today. Okay, one of them's taxes, so maybe not that exciting, but three good topics for you this morning that we're going to cover. First, I'm going to talk about where are your tax forms, because I get asked that quite a bit. Well, promises tomorrow. What? Tomorrow's Friday. We'll see if they hit Friday or Monday. Either way, obviously, we use Schwab as our custodian. So we'll talk about that and tax filing strategy. Then I'm going to hand it over to Mike. He's going to talk a little bit about, what's on everybody's mind for the past couple of years is recessions and where we are with, or recession prediction, I should say. And where are we with like GDP growth? And he's going to touch a little bit about how elections either affect that or not. And then lastly, we covered two ego stocks yesterday. Again, that's exponential growth opportunity, no guarantees, right? No crystal balls, but opportunity. We have one more for you today, monday.com. So excited to bring those to you. Before we get started, though, this is a financial education presentation where you have to do your own due diligence for acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com. So let's get started with taxes. Steve, where are my tax forms? Well, great news. We're supposed to be getting them tomorrow, right? Is what Schwab says. They originally said the 18th. Now the 19th. Then they're saying the 16th. So in the next few days, you're going to have them. You'll generally get an email saying that your tax forms are ready, and then you can log in and get them. If you think you might have missed the email, you can go in and actually just check your account, look under documents and statements. There's a tax portion of that where you can check at any point in time. And lastly, if you're just not seeing it or you don't feel like logging in, reach out to your advisor and say, where are my tax forms? And, worst case, we can email them to you. We can throw them in the mail and send them to you. We're here for you. But you need to know what to look for. So the tax forms, this is off a Vanguard website instead of Schwab, but it was the best explanation that I've seen. If you have a taxable account, you're going to get a 1099. Now, Schwab does a consolidated 1099-B, which means the 1099-B, which is just your gains and losses, right? That stuff goes on Schedule D, not to get too tax nerdy, if you will. And then you have 1099 dividend interest, and 1099 interest. All three of these go on your consolidated 1099-B, excuse me. In addition, if you do have this OID, if you're into individual bonds and this thing, or, bond funds sometimes have, generally we're talking pennies, but some of these adjustments, that's kind of buried in there as well. So instead of having these several forms like, 20 years ago, you would get everything separately. Schwab packages it into one, and most custodians do that if you have off accounts, here and there. So that's the actual taxable account. Remember, if you have an IRA, you're not going to get a tax form talking about how, you're going to get what's called a gain loss report. So Schwab still puts that out. So, whether your account's up or down, doing good or bad, that sort of thing, whether to high five Steve or yell at Steve, that sort of thing. So you get that information, but it doesn't have anything to do with your taxes. The only form that does have to do with your taxes is down here, and that's the 5498, which simply tracks your contributions, how much you put in. There's a limit each year that tracks how much you put in, and you want to keep these so you have long-term tracking. So there's times when you can get a situation where if you withdraw before retirement age, you have to prove how much you've put in, so have it. You probably won't ever, most people don't ever use it. Now, the trick with the 5498 is sometimes people will be like, Steve, it's March and I don't have my 5498 yet. Well, it doesn't come out until May. You do not file it with your taxes. It is simply an accounting form. So if you think about the tax law with IRAs, you're allowed to wait until tax filing date of the following year. So in 2024, you have until April 15th or whatever the particular day is this year to manage, to figure out your income and then decide to go back and maybe plus up your IRA contribution. So since you have all the way to tax filing day, it would not make sense for them to put this form out before you file. So it basically goes 1 month after filing is generally when you get this 5498. So that's when you will get it, is later on when you're not thinking about it, right? And if you go in right now, you can find last year's. The last thing I will talk about is if you are doing a backdoor Roth IRA, there's lots of reasons to get the 1099-R. If you get any pension, Social Security, military retirement, teachers retirement, that's all 1099-R income. That's not earned income. But if you are doing a Roth conversion, which many of you do, because there's income limits, you make too much, you have to do the backdoor Roth IRA. Part of that checklist is doing a Roth conversion. And if you do a Roth conversion, then you're going to have this 1099-R. So if it's your first year doing that, that can freak people out, right? It's your first year doing a Roth conversion, all of a sudden you're getting a tax form. Well, that's because remember, as part of that conversion, you have to pay taxes on that amount. Unless you're doing the backdoor Roth IRA where you put the non-deductible stuff in and then you immediately convert it before there's gains. It'll say, 7,000 or 6,500, but none of that will be taxable because there's no gain associated with it. So that's enough for taxes on a Thursday, for sure. But just realize, what are the big picture points here? You're going to get your forms in the next couple of days. If you ever can't find them from logging in, reach out to your advisor, and your advisor can either point them out, send them to you, either electronically or in the mail. All right, so that's all I've got for taxes. I will stop the sharing on my screen. Over to Mike. First thing he's going to talk about again is some GDP stuff for this morning. So go ahead, Mike.
Okay, fantastic. So one of the things that I think about and I hear about a lot in the news is GDP and where we are going, whether we're going into a recession or not. And just a reminder, recession is 2 quarters of negative GDP growth. I pulled this slide up because I want to show how views have shifted. So the red is the previous, like 1 year ago type estimate of GDP. And you can see that if you look kind of the left 2 bigger bars, borderline recession. They showed -3 to -0.1 and 0 to 1.4. So we're kind of teetering on that in the previous probabilities. And this comes from the Philadelphia Fed office. But the good news is the blue is actually the current. So you can see the red is shifted over to the right. There's still a small probability predicting recession, but overall a positive shift. And one of the questions I was very interested to check out was what happens with the GDP in an election year? Because guess what? We're in an election year. That's going to come up. We're certainly expecting market volatility. And I have a nice graph to show the last 24 years of GDP growth. Now, when you look at this, you see that nice blue dashed line. That is a 2% trend. We like that. That is nice and smooth. But even the actual numbers around it are pretty smooth. So you can see the 2008, that debacle that happened back then, and the GDP went down, and we did hit a recession back then. But then look at right back on that 2% trend. And then in 2020, all the COVID hitting, all that, you see the dip right back on 2% trend. So when I look at this line, guess what I don't see? I don't see elections. I mean, I get it. Some of these things did happen around election time, but the effects were outside of the election. So, to me, that's just a positive way of looking at our GDP. We are in a fantastic country that promotes growth, and you're seeing it here.
Yeah.
I'll throw on the side too that you can see the components of GDP, and that big blue area is consumption. So personal consumption, and that's certainly an area to watch is how much people are spending. Go ahead, Steve, because we want to talk about spending on Valentine's Day, I'm sure.
Yeah, that was yesterday. It's like, what can we spend on today? But I do think this chart, you make some great points, Mike, and also kind of parlaying that to the overall, not only what's going to happen this year, is there going to be a recession or not, but why do you stay invested over the long term, right? It's the absolute strength of the economy. If you remember, I had we got an S&P downgrade for the United States last year, and it was I happened to get an interview. With a magazine, I was talking about if the economy stays strong, we're staying long. So that's why you're staying long most of the time, based off of this chart. So that'd be one thing. And then the second thing, Mike, if you remember back to 2000, after 9/11, right, and President Bush at the time was saying, get out, go to the mall, keep spending and stuff, because really our economy is, what 2/3 based on that consumption factor, which is huge. So what happens when people get scared and stop spending? 9/11, COVID, kind of the two, with a little blip in there with the great global financial crisis, but that was something different. But it really is based on all of us continuing to go out and live our lives and doing what we're doing. So I think you make some great points there off of these charts.
Yeah.
And then next up, we're going to talk about yesterday. We talked about two exponential growth opportunity names. Now, these names have been doing very well. And of course, it's always good to slap high fives when things are going well. But you'll see when you look at these, they do move up and down. But Mike's going to talk about Monday.com this morning, ticker MNDY.
Yes, this is one of our ego stocks that we really like and has done really well since we selected it. But it is a collaborative workflow software. The company is actually out of Israel. And it's open platform, which means organizations can come on there, do their thing, kind of that more shared platform. Apple has a great platform as well, a little less shared on Apple, but this one is wide open, all about improving productivity and efficiency. I found a commercial where Monday.com is used by the NASDAQ. And it's just like a little 1-minute commercial that shows how the NASDAQ, when they bring on IPOs, they use this software to manage that workflow. So overall, Monday announced earnings a few days ago, and the overall revenue was up, overall earnings up. They guided a little lower, which is why you see this dip. Like it had shot up over like 235 and it dipped on that guidance. They guided down from 41%, they guided to around 27% growth, which, that sounds, either one sounds pretty good to me. But when you take a step back and look at a chart of this, you can see that Monday.com has done very well. If you just look at since November, but this has been in our portfolio since in January and is up. Certainly, we bought some of it below 200. One thing I did like about this company that I wanted to show is this is a company that has just become profitable. So if you look at the earnings trends, you can see on here that the blue is good. That means they're making money. They're profitable, and that's where they're at. These little green arrows are surprise, upside. When they say, "Hey, we surprised you. We made more money than you thought." So this is one of our ego stocks that I really like, and just thought I'd share it.
No, that's a great point that you're making there, Mike. And one thing, that forecast, yeah, guiding down to only making 27%, you're right, still 27% is pretty darn good. And then when you look at research and firms, or when we try to invest, some people don't like individual stocks, scary, ooh, whatever. We don't mind that. We like it. And one things we look for is that switch to profitability, and tied to that is trying to get ahead of that. Peter Lynch said the key to investing is anticipating the anticipations of others. So the company is going to become profitable. So you definitely want to invest, right before they become profitable. And then if you're really good, you'll invest even just before that. So getting in early sometimes, and accepting that it's still not quite there yet, positions you for when it does become profitable, and then it takes off. And you'll see that in several of the ego stocks out there. So thanks, Mike, for that information. That's all we've got for today. As a reminder, it's financial education presentation, so you have to do your own due diligence for acting upon anything on this. And with that, we will see you back tomorrow morning. Bye.